Hello trading friends, and welcome back to Forex Focus, brought to you by IG. Having a look at the recent dollar weakness and gold bounce back in light of what was a pretty big retail sales miss. We'll get to that data in just a second, but first let's have a look at US dollar weakening across the board against almost every currency here provided by IG, seeing dollar down in a range of around unchanged. Pound didn't appreciate too much, for example. Some of these currencies not seeing too much bounce to them after the recent US dollar strength that we've seen, but some of them starting to gain some steam. And I'm looking at the Aussie in there, the Swiss franc, as well as Canadian dollar, and some of the lesser traded European currencies like Swedish krona. Like I say, gaining some steam here, and we'll see how far they can get. Retail sales, not the most important data point, but probably a top 5 data point on a monthly basis here in the US, and it missed pretty bad. Was expected around unchanged, negative 0.1%, I believe was the exact expectation. Came in at negative 0.8%. And as far as 2024 goes so far, one of the only data points, major data points, to show the U.S. economy contracting. You'll remember that both non-farm payrolls this year have been higher than expected. Inflation readings recently here coming in higher than expected. And this retail sales miss by such a substantial amount has started to shake in a little bit of that trend, because those higher than expected numbers have fallen in line with or coincided with interest rate projections rising in the U.S. and some dollar strength there, and have also coincided with some gold weakness in recent weeks, as this market has gone from a peak above 2050 all the way down right close to $2,000, and off this retail sales number bouncing back, at least in the short term. We'll see if it can hold $2,000 or will trade below it for really the first time in the last couple of months here. And you'll remember historically, going back pretty much any stretch of time, as long as gold futures have existed, prices above $2,000 or even close to $2,000 are at the higher end of that historical range. And so I think a lot of us wondering, is 2,000 the new normal? And for instance, with this retail sales number and other macroeconomic data and news coming out geopolitically, is 2,000 the new normal? Or will this break at some point and gold will reverse lower? Once again, the two have, gold and US dollar have been moving inversely in recent trade. That's for sure. So if you're liking this gold bounce, maybe you want to get short dollar. That would be a potentially highly correlated idea. If you think gold might be moving lower, dollar has historically been moving higher with gold prices moving lower. And you can check out our other segments where we're talking about gold correlation. But let's dip back into what this retail sales number means, because with missing economic data, lower than expected economic data, whether it was retail sales or GDP or inflation or employment numbers, you might expect that the probability of a rate cut coming from the Fed, which is what traders have been expecting the last handful of months, they've been pricing into 2024, is some rate cuts from the Fed. And even Jerome Powell has said that they're looking at potentially cutting 2 or 3 times. That's what their dot plot said at the end of 2023 for 2024. But actually, the odds didn't shift that much. Interest rate markets had a knee-jerk reaction, but at the end of the day, you're still seeing more than a 60% chance that in the May meeting, there will be no change to rates by then, and let alone the March meeting, which we haven't even hit yet, where I believe the chances of a cut are around 10%, and still more on the unlikely side than the likely side of a rate cut in March and in May, even with this miss. But we'll continue to watch this U.S. data because we've seen that U.S. data points have been some of the biggest movers in forex markets for sure. Here in 2024, you have the huge move off of that FOMC in January, big intraday move and a big reversal. And then right afterwards, you have this non-farm move, which was absolutely unbelievable. If you go back to take a look, that's a good case study for how important U.S. data points are. The non-farm for the first week of February, one of the biggest moves, as a lot of people were pricing in U.S. dollar weakness just before that. Rate cuts are coming, and then non-farm payrolls for that first week of February was, I believe, almost twice the expectation, and moved that dollar strength right back into the market. And then, of course, recently, the higher than expected inflation here in the U.S., and that potentially pricing out those interest rate cuts, interest rates maybe staying higher, and dollar strength off of that. And now the recent reversal with the retail sales, and plenty of more important data points coming from the U.S. throughout the rest of the month. We'll have GDP and PCE inflation, a very important one. And then, of course, we have plenty of FOMC events and everything else to come throughout the rest of the year. But there you have it. The retail sales miss, a short-term bounce here for gold, and reversal lower for U.S. dollar. We'll see how long it all lasts.